Earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Thomas, Whole-Time Director of the company. Thank you, and over to you, sir.
Good afternoon. Welcome to our Q4FY25 earnings conference call. Along with me, we have our CFO, Mr. Shripal Shah, Mr. Ashish Tamal, our internal IR, and SGA, our investor relation advisors. I hope all of you have gone through our investor presentation uploaded on the exchange and our company website. FY25 was a remarkable year for us. While the strategic reconfiguration and consolidation of selected land parcels led to some delays in project launches, these steps have significantly enhanced the efficiency and long-term value of our project layouts. We saw strong, broad-based momentum across our portfolio, spanning luxury, value luxury, and commercial segment. We are optimistic that the deferred commercial project approved. During the year, we raised 343 crores, which was fully utilized towards acquiring commercial land, working capital, and paying for additional FSI. We recently acquired a 390 square meter land parcel at Shivaji Park, where we plan to develop a luxury project with an estimated GDV of 80 crores, offering scenic sea views alongside excellent metro connectivity. As we look ahead to FY26, we're excited about a strong and diverse launch pipeline that reinforces our leadership in South Central Mumbai market. This includes a marquee commercial development in Mahim, along with multiple value luxury residential projects in Mahim, Shivaji Park, and Dadar. Our deep expertise in redevelopment under DCR 33/7 continues to be a key differentiator, enabling us to unlock complex projects and deliver high-value outcome. In FY26, we plan to launch a mix of residential and commercial developments with a combined GDV of 2,000 crores. This includes contribution from three projects in the residential space such as Parkview 1, which is in Shivaji Park, Lobo Villa in Mahim, JRE project in Baikala, Lucky Chawl in Mahim, Shivaji Park project, which was recently acquired. Further, our commercial development on Tulsi Pipe Road alone accounts for 1,200 crores of the GDV. Additionally, we're happy to announce that we have in-principle approvals of 2 lakh square feet of additional carpet area under the Metro FSI for our Marinagar project in Mahim. This expects to generate an incremental GDV of 800 crores only in this project on account of the Metro FSI, further strengthening our growth prospects. With regards to new launches, our project Parkview 1 in Shivaji Park and Kauri Wadi in Prabhadevi is on track. All our tenants have been relocated, the existing buildings have been fully demolished, and the site is now fully vacant. We have applied for commencement certificate, post which we will obtain RERA registrations for both these projects. The combined GDV of these two projects alone is 370 crores. With regards to the commercial launch, we have received fire approvals for the amalgamated plot of 426A and 426B. We have submitted concession approvals and expect the same shortly. With the fire approval already in place, we are on course for a high-impact launch in H1 of FY26. With a calibrated strategy, a robust pipeline, and supporting market fundamentals, we are well positioned to drive sustained growth and deliver long-term value to our stakeholders. With this, I would like to hand over our call to our CFO, Shripal Shah, who will run you through the financial highlights.
A very good afternoon to everybody. I will now run you through the financial highlights for the quarter and year ended March 2025. Starting with the performance for FY25, the total income grew 33% year over year to 553 crores versus rupees 416 crores in FY24. This growth was primarily driven by increased sales of units supported by strong brand recognition in the South Central Mumbai micro market. EBITDA grew 13% year-over-year to rupees 207 crores in FY25 versus rupees 236 crores in FY24. Operating margins were impacted by higher operating costs, including a 30 crore charge in FY25 for settling litigation with a JDA partner The settlement cost was split equally between 15 crore booked in quarter 3 FY25 and 15 crore in quarter 4 FY25. PAT increased significantly by 48.
Sorry, ladies and gentlemen, we have the line for management disconnected. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently waiting. We have the management back with us online. Over to you, Shripal sir.
Yeah. So I'll just repeat. I think we got disconnected in between. So just to starting with the performance for FY 2025, the total income grew 33% year-over-year to rupees 553 crores versus rupees 416 crores in FY 2024. This growth was primarily driven by the increased unit sales supported by strong brand recognition in the South Central Mumbai micro market. EBITDA grew 13% year-over-year to rupees 207 crores in FY25 versus rupees 236 crores in FY24. Operating margins were impacted by higher operating costs, including a 30 crores charge in FY25 for settling litigation with the JDA partner. The settlement cost was split equally between 15 crores booked in quarter 3 FY25 and 15 crores in quarter 4 FY25. PAT increased significantly by 48.5% year-over-year from rupees 67.5 crores in FY24 to rupees 100.2 crores in FY25. The increase was attributed to better price realization and savings in finance costs during the financial year. PAT margin improved from 16.4% to 18.3%, reflecting a more efficient cost structure and value accretive sales. On a quarterly basis, the total income grew 33% to rupees 137 crores in quarter 4 FY 2025 from rupees 103 crores in quarter 4 FY 2024. EBITDA grew 45% to rupees 31 crore in quarter 4 versus rupees 56 crore in quarter 4 FY24. PAT grew 6% to rupees 18 crore versus rupees 20 crore in quarter 4 FY 2024. Coming to the operational performance for FY 2025, pre-sales in value terms grew to rupees 501 crore, which was in line with our revised guideline, which was issued during the quarter 3 FY 2025. What is 480 crore in FY 2024? This is a notable achievement despite no new launches during the particular financial year. Collections grew 22% on a year-over-year basis to rupees 386 crore from rupees 316 crores in FY 2024. Collections for FY25 improved due to strong execution focus and the steady stage-wise progress of the ongoing projects, along with a good sales in terms of balanced mix of portfolio of projects. Realizations grew 21% year-over-year to rupees 54,353 per square feet from 45,074 per square feet in FY24. For quarter 4 FY25, pre-sales grew 14% year-over-year and stood at 25,848 square feet in terms of area, up from 22,713 square feet in quarter 4 FY 2024. This strong growth was driven primarily by robust sales in luxury projects such as Palette and Ocean Star, along with successful absorption of existing inventory in the value luxury segment. In value terms, pre-sales grew 20% year-over-year and stood at 146 crore, from which rupees 122 crore was in Q4 FY 2024. Collections for Q4 FY 2025 stood at 103 crores, and realizations grew 5% to 56,508 rupees per square feet in Q4 FY 2025 versus rupees 53,651 in Q4 FY 2024. Realizations were high, supported by strong contribution from luxury project sales. Our net debt rose from 360 crores in December 2024 to rupees 414 crores in March 2025, driven by fund requirements for the launches of our upcoming portfolio of projects, which include a commercial project at Mahim, Parkview 1, which is and Kovliwadi and Kripa Siddhi project at Prabhadevi, and project at Marinagar, for which we have obtained in principle and NOC from Metro, and land acquisition at Shivaji Park. With this, I would like to open the floor for questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. I would like to remind participants, if you wish to ask any questions, you may press star and one. We have our first question from the line of Utkarsh Jain from D Street Broking. Please go ahead.
Hi, sir. Good afternoon. Can you hear me?
Yeah, absolutely.
Yeah. So, sir, I had one query. What's your guidance for this financial year in terms of revenue growth and for EBITDA margin? And sir, also can you guide an EBITDA margin a figure so that we can assume it fluctuates every quarter? Our margin fluctuates every quarter. So is there a number we can assume?
So we'll start with the pre-sales. We're just waiting for the launch of these three of our new projects. So we will be giving the guidance very shortly. You can be part of the call for that. With regards to the margins, I think Shripal will explain.
So EBITDA margins are typically in the range of 40 to 45% annually. Quarterly, it will differ because of the product mix and value segment in luxury and commercial, and also depends on the progress of the projects on quarter. And as a result of which we have to see annually. So annually we feel 40 to 45% is the EBITDA margin is sustainable.
So we have the participant disconnected. We'll move on to the next participant from the line of Bhavin Modi from Anand Rathi. Please go ahead.
Yeah. Hi. So my first question is regarding the 30 crore litigation, right? So 15 crore is charged in Q3 and 15 crore in Q4. So can you just help us with what is this, the litigation about, and are there any, further ongoing litigations, for which there will be financial implications?
Hi, Bhavin. So this litigation was with Runwal, our partner in our project called Nirvana. That's already part of our DRHP and already mentioned in the litigation section of our DRHP. We have now settled that matter amicably, and in fact, just to say that we also got OC for that project and handed over to our customers. So as part of our settlement deed, we had to pay. So this is two amounts, 15 crores last quarter and this quarter, which will be the amount which will be charged to the PNL. This is again a one-time matter to settle the matter with the JDA partner.
Okay, so there are no further litigations, right now which are going. I think everything is settled, right?
Absolutely.
Yeah. The second question is respect to the pre-sales, that you have done in Q4. So what is the, implied EBITDA margin for the pre-sales done in Q4 and in the entire financial year 25?
So it will be close to 40 to 45% in that range.
Okay. And can we, safely assume the same thing, for the pre-sales going forward for FY26, FY27?
So till FY26 you can assume, but going forward we will pan out on the basis of the new launches because our existing projects are nearing completion.
Right. Okay. Yeah, my third question is with respect to the Suraj Wise, so we are, I think it's mentioned, it will be launched in the Q1, right? So, first question is with respect to, have we received any, like interest or something from the, the prospects with respect to the space and what type of the space they are looking for? So, are they looking for, small offices, larger floor plates? And are we also looking for, like a option of, handing over the space to someone who, some private equity who are running co-office space or co-working space?
So, Bhavan, just on the approval standpoint, as I updated on the call, we've already got our buyer clearance and we've submitted for the concession for the amalgamated land. As you're aware that we earlier had one land, we've amalgamated with the one on the side. So with the amalgamated portion, the concession are yet to be received. We expect that to come very shortly. On the concession, we have applied for CC for the amalgamated land and of course PRERA. So we expect the launch, of course, before H1. We are targeting if we could do it before in this quarter, but I see due to regulatory approvals, we won't be very comfortable on our launch timeline, and we can take it safely of H1 of this year. With regards to the clientele and the requirement coming in, we see a very buoyant commercial space and demand. We're getting demand from all the kind of, whether it is equity people, whether it is actual users who are looking for larger spaces and corporates. We've already are in the process of identifying a couple of clients. They have already done visits. We will update you shortly on that. Our target is to sell it ideally to a larger corporate. That is our wish list. But we also see a demand for very small offices. So depending on the demand, we have the plan aligned for even making smaller offices or larger floor plates. Both will be aligned in this current plan.
Right. And so last question, just with respect to the timeline of the launch, right? So now, it's like, rainy season, the monsoon season, where the launches generally, are being deferred. And second, there is the optics going on with respect to the corona, again, resuscitating. So are we planning to, have delay the launch? That is the one point. And the second point is, if we are doing the we are doing the launch. So what is the pre-sales that we are looking for on the day of the launch or in the month of the launch? Like what will be the upfront pre-sales? If you can even give in terms of percentage, that will be helpful.
Regarding the launch, we will not be waiting whether it's monsoon. We will not be waiting. As soon as we get the IOD and the CC, we will be starting the site. There are formalities, of course, can continue. So physically, as soon as we get the CC, we will be starting the work at the site. We already have a financial tie-up for that particular project from a very big institution. So that is already financially, we are already ready to start that project. With regards to your question about delaying the launch for any other festive season or any other rain season, we will not be delaying that for that.
And the second question was with respect to the, what is the percentage of the, pre-sales, that we are looking, on during the time of launch?
We are very optimistic on the demand in the commercial segment. So it will be very hasten to tell you what percentage can be sold. We are discussing with clients for either the whole piece, it could be a couple of floors. So these are the conversations going on right now. So it has to see how everything pans out.
But if you can even give tentative range or something like that, that will be like, since this is one of the big launches, like 1,200 crores. So, like, if during the launch we are expecting something around, suppose, 10% or 15%, between 120 to 180 crores or something like that. So, can we look at those range?
See, as I said, commercial is in demand today, so we would want to do a larger floor plate and larger deal today. That's the conversation going on. I can only tell you that as of now, but we are very buoyant that something major will happen, and I think let's keep it to that. Let us just focus on the launch, and then we'll update you.
Okay, sir. Okay, thanks for giving me the opportunity, and all the best.
Thank you so much.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1 now. We have our next question from the line of Krishnam, an individual investor. Please go ahead.
Hello. Hi, thank you for the opportunity. Am I audible?
Yes, Krishnaji, please go ahead.
Yeah. So the first question is on the EBITDA margins. You've guided for a sustainable 40 to 45%. And if I look at Q4, it's around 22.4%. Even if I adjust the one-time litigation settlement, it comes to around 33%. So the balance 12% odd is due to the increase in operating costs. Now, can you throw some more light on what is the nature of these costs, and are they likely to be inflated going forward as well?
Krishnaji, just to answer your question, I would suggest we look at the annual numbers, because quarterly there may be variations in the EBITDA numbers depending on the product mix and other things. But if you adjust the one-time cost, so our EBITDA margin actually comes out to 40 to 43%, which is in the range of 40 to 45%, which we have already guided in the last quarter as well. So going forward also we will want to maintain the same 40 to 45% range of EBITDA.
So if I just...
Annual basis.
Got it. So can you just throw some light on the operating cost? Like, what is the nature of this increase, and how are we looking at it going forward?
So it's all development cost, construction approval and other costs, which is pertaining to the project.
Got it. Okay. The next question is on the other current assets. So if I look at 31st March of last year versus this year, it has jumped from 266 crore to 669 crore. And I think that has also impacted the operating cash flow. So can you throw some light on this as to what is the nature of this?
It's more of the WIP has increased substantially. If you see, inventories have gone up substantially. Last year it was presentation. This year we have done a few BDs, like 110 crores we invested in the land at Mahim, and also we have acquired one plot of land at Mahim near at a residential Lobo Villa for 38 crores, and a plot of land at Shivaji Park. So close to 150 crore of BD has been done. So because of which there is an increase in the assets, which is not yet started, but this year we plan to launch all these sites. So these are all sites will come into operation this particular financial year.
Got it. But these BDs would be reported under inventories, right? I am asking about the other current assets. So there's a 400 crore increase in the other current assets.
We'll revert to you on that, sir.
Got it. And the last question is on the new launches. So in FY25, since there were no launches as such, so in FY26, can we expect like 2 years worth of launches, or is that too optimistic?
So as I informed earlier on the call, we are very optimistic to have a 2,000 crore GDV of launches for this year. So as I updated on the three big launches, we're already in advanced stages. So we're very optimistic that these launches will definitely happen, and it'll happen very soon.
Okay, got it. And those would mostly be in H1 itself, right?
So roughly about 1,500 to 1,600 crores will be in H1, and the balance would follow in H2.
Got it. Okay. Thank you. All the best. Do let me know about the other current assets.
Yes, we'll get on a call.
Yeah. Thanks. Bye.
Thank you. A reminder to all participants, you may press star and one to ask a question. We have our next question from the line of Anant Mundra from My Temple Capital. Please go ahead.
Hello. Yeah, thank you for the opportunity. Sir, our interest cost for this quarter is just 4 crores. So could you just explain why is it so low?
You have to average it out. Overall, the financial year FY25 is 65 crore, which is in line with our estimate, which we have guided during this third quarter conference.
So we have to look at that number on an annualized basis.
Annualized basis, yes.
So okay, got it. And so if I see, we've also raised some three.
So also we had raised equity. So we had repaid some high cost debt like ICICI Venture. We had repaid last quarter, which was there close to 45 crore. We repaid ICICI Venture, which was at 17%. And with the prep money and operating cash flows, we have repaid them. And during this quarter, there was the impact was less. And also we had made some provisions for finance costs. So accordingly, the cost has come down. Overall, our weighted average cost of capital is close to 13%.
Okay. So and our debt right now is around 400 crores. Net debt is around 410 crores. So for next year, we can expect that to be around 50-55 crores, the interest expense?
It could be in the range of 60 crores close to, because we will need some debt for the growth capital as well. For launching the new sites, we need to have those resources into place. So our debt might increase a little bit in the interim, but at the end of the day, it will throw a lot of cash flows in the upcoming projects, which is estimated pre-sales of 2,000 crores of launch.
Okay. And sir, you highlighted that, we raised around 343 crores in September last year. And then, we made a PAT of around 40 crores in H2. So the total cash that we've generated is about, 380-390 crores in H2. So, and our debt has not gone down. So where has all this, cash been utilized for? Because we've only acquired 110 crores worth of one land. So balance money has been utilized for what purpose?
So we have also tied up for the Metro Park FSI and other approval costs for the commercial project. So a lot of this money is going into upcoming portfolio projects which we are ready to launch in this particular financial year.
So could you broadly give some breakup? Because out of 380 crores, around 110 crores has been utilized for the acquisition. So around 270 crores is balance. So that 270 crore could you broadly highlight? Yeah.
Out of 343, we have received only 293. 50 crore share warrant is not yet received. So the number is 293.
Okay. So 293 minus 110, so that is about 180 crores. So 180 crores breakup, could you just give roughly?
180 crore, a lot of operating levels we have utilized for the ongoing projects. We wanted to expedite the construction and deliver the projects because a lot of our sites are coming in the next year, 1 year for delivery. So we have put in approval costs for a project palette, Ocean Star, and Eterna and other projects which require the kind of capital to expedite the construction and development.
So this is mainly used for projects which are ongoing, or it is mainly used for projects which are going to be launched next year?
So it's a mix of both the projects. Close to 80 crore we have infused in upcoming portfolio and balance in the ongoing portfolio projects.
Okay. So ongoing portfolio, our understanding, or at least my understanding, was that the current receivables, the sold receivables are enough to, take care of the construction of the ongoing projects. But however, from the fundraise also, we've used some money there.
So certain approvals costs were required to be paid to get the further approvals of the project, Palette and Ocean Star and Eterna. That's why we had to use those money to get the approvals. Because earlier Palette was just CG per 41 storage. It has gone to 50. So a lot of payments were required to be made at this point in time. So that was tied up, and now the construction is going on. We are on the 49th floor of the project. Will come in the following years. So it was a working capital gap which we bridged by way of rep money also.
Okay. So, for whatever upcoming projects that we have currently, are we further anticipating any, capital raise or any kind of dilution in future to fund these projects?
Presently, we are not looking for any further capital raise. We will manage with our sole receivables, and upcoming projects we will take debt which is at low cost for the PF part only, and that will be for a shorter period of time, so that till the time cash flows come in.
And what kind of peak debt numbers do you see to execute whatever upcoming projects that we have in hand?
Close to 500 crores we feel it should be there.
Okay. Got it. And sir, did you all give any kind of guidance on the pre-sales and revenue? I'm sorry, I joined slightly late and I might have missed out on that. So if you could just repeat.
We will give it in the next quarter. Once a few launches are there, we will be prudent to give you at that point in time.
Okay. And what launches are we expecting this year? Any guidance on launches if you've given?
2,000 crore of launch is there this year, out of which 1,200 crore is from the commercial project at Mine. Balance 800 is from the residential projects. Close to 7 projects we are planning to launch.
Got it, sir. That's it from my end. Thank you.
Thank you. We have our next question from the line of Tanya Desai from Elevate Research. Please go ahead.
Hello, am I audible?
Yes, you are.
Yes, go ahead.
Yeah, thank you for the opportunity. Good afternoon, sir. I had a couple of questions. My first question was that with the upcoming 19 projects and 10.2 lakh square feet of carpet area in the pipeline, how do you prioritize these launches based on the market conditions that we have?
Sorry, I didn't follow you. Prioritize, I didn't understand the last thing what you said.
So we have around 19 upcoming projects in the pipeline with a 10.2 lakh square feet of carpet area. Am I correct?
Correct.
So I was just trying to understand that how are we prioritizing these launches?
So in terms of our category, so first and foremost, we look at the projects which are in advanced stage, either in approvals or in terms of if the land is vacant. So as I said earlier on the call, 2 of our projects, we've already vacated the tenants, the plans are approved, the site is vacant, we've applied for CC. So we would prioritize something which is in advanced stages where people have already shifted out on rent. Those would be obviously our priority because rents are also running. Secondly, most of our upcoming projects are in the segment of value luxury. The new launches in Prabhadevi, the one which we plan to launch across the year, the 800 crores of residential projects, will be in the 1 and 2 BHK range. So we're very mindful that our new launches will be in that range of 1 and 2 BHK, starting from 1.4 to 1.5 CR for the 1 BHK, and it goes up approximately around 2.5 to 3 crores in the 2 BHK. So all new launches for the 800 crores for this year will be in that category. While the commercial, as I said earlier, we're talking to clients for both larger office spaces and compact offices. So the plan is quite versatile. We planned for both the eventualities, that if we get a larger client, we'll go for the larger floor plates or for the smaller offices. So the strategy for this year is value luxury and commercial. If I would just kind of do a brief synopsis of the strategy for this year.
Okay, all right, sir. But can you just help me with the names of those projects and what will be the GDV of those projects?
Sure. So Parkview 1, which is at Shivaji Park. Roughly the GDV is about 250 crores. We have another project called Kauliwadi, which is at Prabhadevi. That's about 120 crores. We have a commercial project between Mahim and Matunga, which has a GDV of 1,200 crores. And we have Shivaji Park, which is GDV of 80 crores. We have Lobo Villa with a GDV of approximately 120 crores.
20 crores.
We have JRU with a GDV of approximately around 90 crores. And we have Lucky Chawl with a GDV of approximately about 65 crores.
Okay, sir. And what is the expected phase rollout?
Sorry?
Hello?
Expected? I couldn't hear you.
Yeah, I was asking what is the expected phase rollout?
Sorry, we did not get your...
You mean the launch?
Yes.
So as I said, 3 of these projects I expect in H1, which I said Shivaji Park, Parkview 1, Kauliwadi, which is in Prabhadevi, and the Mahim commercial. We're expecting that in H1, while the balance will be in H2.
Okay, all right, sir. Thank you so much.
Thank you.
I'll join back into you.
Thank you.
Thank you. We have our next question from the line of Himanshu Duggal from Stylus Holdings. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah, thanks. So my first question is around the interest expense. I find it pretty low this quarter. Could you just highlight if there's some anomaly this time, and how can we expect the interest cost to go for FY26?
I would suggest to look at the interest expense on an annual basis.
Okay.
As compared to this.
So we did around 66 crores for the full year.
Yeah. So going forward, we estimate the weighted average cost of capital is close to 13%. So assuming that you can take the assumptions going forward.
Got it. The other question I had was around the projects that have now gone into OC awaited. So we have, I think, 3 projects now, right? Where we are just waiting for the OC. So roughly in terms of the receivables, around like what could be the timelines on the receivables, and how do we expect the cash flow? Because you have your new launches as well as activities going ahead. Would you have to raise further funds, or these receivables we are expecting it enough because everything else is done, so probably it comes in a few quarters and that should take care of the construction expenses?
So we have only 2 projects where, and I think most of them have paid except the 5% which is left for OC. I think most of the 95% has already been received by us. So it is only the 5% which is balanced in these 2 projects. And going forward, of course, the ongoing projects will be self-sufficient to take care of its construction costs.
So just to clarify, this say 170 crores which is expected from Louisiana and Air Maria, and around 180 crores from Nirvana. You're expecting this to come in this financial year. Is that right?
No. It's not 180. I think there is a mistake from your. Just look into that.
I'm on your slide 41, which says Louisiana 80. Okay, sorry, that's correction received. I mean the realized price is what? Right, sorry. So that's around 20 crores here and 40 crores there in Nirvana.
Yes.
30 crores in Nirvana, right? So 50 crores roughly. So this should be expected in the coming quarter, like coming half year kind of, right? That.
Yeah.
Understood. The other question was in terms of this Lumina project. So have you already started the construction, or like what is the timeline on how you start the construction? The actual, I see that there are deadline, but generally, what is the typical timeline that you have been seeing in these projects, especially the northern region?
So Lumina, we've already reached the print stage. We're actually expecting the CC for the CC very soon. BMC has already inspected the site. We're expecting the CC soon so that we can get the balance CC for the entire project. We expect the construction to be completed within 2 years. That is before our deadline. But we always keep a buffer for unforeseen delays. But as of now, we estimate within 2 years we'll be able to complete the Lumina project.
Got it. My final question is on the Marinagar. So I think phase 2 is something that would be up for launch in this financial year, is it, or is it a FY27 kind of a story?
So this year, it will not come in for launch this year. It will be for next year. We already have a lot of launches planned for this year, so we just want to bring that on the table.
Okay. So other than the commercial, the Suraj Vibe, which is 1,200 crores, which would be the other projects that you would be looking to launch? I mean, just numbers of 3-4 projects, the top 5 projects from this pipeline, or how is it?
Yeah. So we have Parkway 1, as I said earlier. Parkway 1, 250 crores. We have a project called Kauliwadi, which is yet to be named, at Prabhadevi near Siddhivinayak Temple at 120 crores. We have another project, Lucky Chawl, which is approximately around 60 odd crores. We have a project in Baikala, which is
90 crores.
90 crores. So we have a project in Shivaji Park, 80 crores, top line. So all these, that's why I said the combined GDV of all this would be approximately around 2,000 crores is what we're planning to launch.
Understood. All right. Yeah. Thank you so much.
Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1 now. We have our next question from the line of Rajendra Pasi, an individual investor. Please go ahead.
Hi, sir. So, am I audible?
Yeah, Rajendra, please go ahead.
So mainly I wanted to ask that as we had the plan to raise 500 crores and we weren't able to do that as our issue was kind of undersubscribed. So what kind of impact can we basically foresee that we weren't able to raise the capital that we wanted to?
So your question is, where we were earlier planning to raise 500, we raised 343. For the shortfall, what impact would it have? Am I correct?
Correct. And 50 crores is under warrants as of now, right? So ideally we have only gotten 293. So for the rest, like what kind of an impact can we have on our project and our future?
So we wanted to invest those proceeds for our upcoming project in Bandra as well, to hasten that launch. So that maybe we will wait for the cash flows of our ongoing projects to be invested, because that is a very big launch coming up. So for that we wanted to raise that capital. But now we can do that with our ongoing cash flow as well for this year. It is just that we will push back the launch a little because we needed a lot of equity to be pumped in before we launch Bandra. So I think that would be the only impact on the timeline of the Bandra launch, nothing else.
But rest will be on timeline. There will be no impact on the other projects basically, like Mahim and whatever we are planning to launch in.
Yeah, it has no impact on the launches planned for this year, the 2,000 crores of GDV.
Okay. And how we are going to fund these, basically the new launches? Like I've seen the balance sheet and I don't think that there is a lot of cash that is left as of now in our hand, right? So how we are planning to manage the working capital of the company?
We already have financial tie-ups with, especially for the new projects. We already have. Let's talk about the larger project because that's what is substantial, which we require. The commercial project is already tied up with a financial institution. So that is, we already have a sanction for approximately around 250 crores, which gives us a closure on the financial requirement for that particular project.
Okay. And that will mainly be debt, the 250, or is it like they're buying something?
Correct. It's debt.
Okay. So going forward, like, can we expect that debt to, like as of now, it is 400 CR. So can we expect it to jump to almost 650 for this year, or like it will be kind of a short-term debt that will repay within the same year itself?
See, temporarily there will be an increase because there will be, let's understand, approval cost needs to be funded upfront before the project starts, before ERA comes in. If there's no equity to be put in, there's only debt option which is available.
Correct.
So we already have sanction from a very large institution who's giving us the funding. So temporary debt will be required because if you have to bring in 2,000 crores of inventory and approval cost has to be funded by default upfront, the only way to fund it would be debt. So debt would go up temporarily, but once the project's cash flows kick in, we expect that from a yearly basis, maybe going up, but finally it will taper down again once the project cash flows kick in.
And can we like expect to go down within the same year, or like we are expecting to go it in next year?
We are optimistic that it may go down the same year as well because we are looking at a couple of large deals. So if that happens and translates, we can look at it going down the same year itself.
Okay. And do we have any plans to go for the fundraising again? Like we had a shortfall of 200 CR, or like we are not going for now?
Not as of now.
That was all.
Thank you.
Thank you. We have our next question from the line of Ansh from Ansh Partners. Please go ahead.
Hi, I just wanted to thank you for the opportunity. And as you mentioned earlier, I could not hear it. Could you tell me where, like from the 300 or 343 crores that you've raised, 50 is yet to come. Could you tell me where that amount is stuck?
It's under share warrants.
Under share warrants.
And,
thank you so much. Yeah.
And we have the next question.
Yes.
Yeah, that's it from my side. Yeah.
Thank you. We have our next question from the line of Pawan Khurana, an individual investor. Please go ahead.
Hi, first of all, thank you so much for the opportunity. We appreciate this. I have first question what I have is about the employee cost, which is shown in the sheet. It's fluctuating a lot, actually. I saw it in Q3, it was around 3.3%. And has gone up to 5.6% in this quarter. And if I compare it year on year also, it has gone up tremendously. So from a 3.5% last year, it is 4.4% now. Any specific reason? Is it expected to stay high or will it come down?
So we have done a lot of hiring for our new launches. We need to build the team to cater to such kind of new launches coming up. We have almost about 7 new residential sites over and above what we're doing in sustenance mode today and the commercial. So we've already ramped up our team to deal with that, whether it's execution, whether it is administratively, whether it's engineers. We ramped up the team. So employee cost, you can take it from an annual basis, would remain the same. We don't see it going up further, but it would remain for the next 2 years.
So just to follow up on that, year 2024, it was 3.5%, and as of now, closing this year is 4.4. Could you give a guidance of the percentage of expected to be next year? Because that's like a substantial difference between 24 to 25.
I feel in absolute terms, we don't see a great increase. Whatever hiring had to be done for this year and the next year, we've already factored in that. It will be a very small variance if it has to, but it will pretty much, you can take this as the employee cost going forward.
And a follow-up of this, how much percentage is the management overheads in that?
I have to come back to you on the percentage. Maybe we can get on a call and inform you.
Thank you so much. I could, even if it could come in an email, that will be absolutely appreciated. Thanks once again. You've been mentioning about the approvals and the expenses and approvals. So sorry, I don't really have an idea about the real estate sector, but let me tell you this. This happens to be one of my largest, investments, and I have a very, very strong hope of recovery from here on. And in fact, I would be adding more. But I just want to know from my perspective, how much is a typical approval cost that you've been mentioning about as a percentage of GDV of a project, or maybe as a percentage of the overall cost of a project?
Correct. So I'll just give you a ballpark. If you're selling a value luxury project, which is about 40,000 per square foot, which is the sale price per square foot of carpet area, we roughly estimate at least about 12 to 13,000 would be the cost only for approvals. Another, that is, we're talking about a vacant land. If it is a 33/7 project, it will be around the 9,000 mark.
Wow, that is huge. Okay, so one last question before I get back in the queue. I understand we didn't have any launches in the last year, and that kind of led to a low pre-sales. And also the last quarter, also the revenue dipped a little bit. I don't know if this question is something which is supposed to be for this conversation, but what would you have done differently if you had to go back and do things that to shore up either of the two?
So I think just ramping up, like you said, launches would be it's very evident that the new launches have to be, brought to a RERA stage where we can launch. And I think that's where we are focusing this year, where we're bringing in all the projects. You can see the number of projects compared to last year and the new launches which are planned this year. And I thought in this call it is very imperative to mention the status of each project which are going to be launched, so that there is obviously a confidence built up with our shareholders that these are already coming and it's in the annual and it's going to come in H1 very clearly.
Thank you so much. And before I go, I'm so sorry, but this is just one more question which I had, which is with respect to, you mentioned about that around 50 crores which have not come in from that share warrants. If I understand correctly, usually these warrants is when people commit approximately and they pay up about 25% up ahead, and the remaining they have to pay over a period of time, right? This was your preferential allotment. So I also understand that if the price drops, then the person has the maybe a choice to forego the 25% deposited and then not pay the remaining, right? Is that a possibility? So do we believe that this 50 will come in, or this may not even come in?
No, there are two possibilities. The particular individuals have an option of exercising that option within the next 18 months. So since we just raised it, I think we're expecting that call to be taken within. We have some time for a person to take a call on that.
So the price at which the professional allotment is given was around 700, 750, if I remember. And
right.
And now if it is trading around 300 something, so do you have any hope of those people really paying the remaining? Or, I mean, if I wasn't that preferential allotment person, I would rather forego them and buy from open market.
What we would focus is bring in the launches, bring in the operation efficiency, and bring the pre-sales. I think that's what is in our hands. I think the price differential is a factor of our performance. So I think as management, we would focus on our launches for this year and bringing cash on the table, and I think the market will do the rest.
Thank you so much. Thank you for the answer. I'll get back in with you. Thank you. Appreciate this.
Thank you. We have a follow-up question from the line of Ansh from Ansh Partners. Please go ahead.
Hi, sir. I just wanted to know if it's possible to meet the management in person.
Surely, we can have it planned through external IR, SGA. You can post the call. We'll be happy to, have a group meeting with a couple of other investors, whoever is interested in a meeting. We'll be happy to meet.
Sure, sir. Thank you so much.
Thank you. Ladies and gentlemen, that would be the last question for today, and I now hand the conference over to the management for closing comments.
I take this opportunity to thank everyone for joining the call. I hope we all were able to address all your queries. For any further information, kindly get in touch with us or our strategic growth advisors, our investor relation advisors. Thank you.
Thank you. On behalf of Suraj Estate Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.